Hey everyone, and welcome to This Explainer. I am absolutely thrilled to be your guide today. We're diving into the complete compliance blueprint for the Maryland sales tax permit. Look, whether you're opening a brand new brick and mortar shop in Baltimore or you're an online seller shipping goods across state lines, understanding how to legally operate in Maryland is absolutely foundational to your success. We're going to break down all of these complexities into clear, actionable steps that you can actually use.
So let's just dive right in. Are you a budding entrepreneur or maybe an already established business? Well, don't risk hefty fines. Discover how securing a sales tax permit in Maryland can safeguard your business and unlock totally new opportunities. This isn't just bureaucratic red tape. It's literally the legal shield that protects your hard-earned revenue. If you are doing business in Maryland, getting this right from day one is simply non-negotiable. Here's a quick look at our roadmap for this explainer. First, we'll cover why a permit is essential. Then, who exactly needs a tax permit. After that, we'll walk through a step-by-step application guide, hit on some common pitfalls to avoid, discuss what to do after receiving your permit, and wrap up with some helpful resources and a disclaimer. Okay, Section 1. Why a sales tax permit is essential. $10,000. Let that number sink in for just a second. According to Maryland state law, operating without a required sales tax permit can result in the Comptroller of Maryland imposing fines of up to $10,000. And honestly, the scariest part? That is just the administrative penalty. It doesn't even account for the back taxes you'll still owe on top of it. The thing is, the consequences cascade really quickly. Law enforcement officers can literally issue immediate stop sale orders if you fail to separately state and charge sales tax, or if you just forget to display your license. You could also face misdemeanor charges that carry additional fines of up to $2,500. Plus, if you happen to provide goods or services to the state of Maryland, they will actually block payments to your business until your delinquent taxes are cleared up. You'll be on the hook for uncollected back taxes plus interest, and to top it all off, you'll completely lose the Maryland vendor discount, which is a great little benefit designed to reward compliant businesses. Moving right along to Section 2. Who needs a sales tax permit? So to figure out who actually needs a permit, we have to unpack a specific legal term, and that term is nexus. Nexus is just a fancy way of describing the legal connection between your business and the state of Maryland. If you have nexus, you are legally required to register, collect, and remit sales tax. But what exactly creates that connection in the real world? Well, there are two primary ways you trigger nexus. First up is physical presence. This is the traditional route, right? Having a storefront, employing service staff inside the state, or even storing your e-commerce inventory in a Maryland-based fulfillment center, like an Amazon FBA warehouse. The second way is through economic thresholds. This one is absolutely vital for out-of-state remote sellers. Even if you have zero physical footprint in Maryland, but you generate over $100,000 in gross revenue, or you make 200 or more separate transactions into the state annually, boom, you've established economic nexus and you must get a permit. Once you know you have nexus, you obviously need to know what to charge. And honestly, Maryland is actually quite streamlined here because there are no local or county-level sales taxes to worry about. It's basically a statewide rate. For general goods, taxable services, and digital products, it's a flat 6%. However, you've got to watch out for some special statutory rates. Short-term truck rentals sit at 8%, alcoholic beverages are at 9%, and short-term passenger vehicle rentals top out at 11.5%. All right, Section 3, Step-by-Step Application Guide. Good news here, registering is completely free, and if you follow these steps, it's a total breeze. First, you'll almost always need a federal employer identification number, or fine, from the IRS. Next, just get your data organized. Have your legal business name, your NAICS industry classification code, which is really just a standard number used to identify your specific type of business, and your exact business start date ready to go. Then, you'll head online to the Maryland Tax Connect portal. Finally, you just complete and submit the combined registration application, which everyone calls the CRA. When you actually open up Section A of the CRA, it's super straightforward. Right at the top is exactly where you'll plug in that EIN we just talked about, alongside things like your social security number, legal name, and physical address. Now, here is a pro tip straight from our sources. Make absolutely sure your demographic data perfectly matches how your business is registered with the state. Even tiny discrepancies here can really delay your approval, so double check it. And here is a real game changer that highlights why the CRA is so efficient. This single application doesn't just register you for sales tax. If you read through the instructions outlining the various tax accounts,
You'll see you can use this one form to open your income tax withholding account, your unemployment insurance account, and even super niche accounts like the tire recycling fee or a transient vendor license. It consolidates the whole shebang, all your foundational state tax setup, into one single workflow.
Let's move to Section 4, Common Pitfalls and How to Avoid Them.
These are the traps that regularly catch new businesses completely off guard. First, delaying registration. If you're an out-of-state seller and you cross that $100,000 threshold we mentioned, you must register by the first day of the following month. Delaying that exposes you to retroactive interest, which is never fun. Second, misplacing your exemption certificates. Third, using inconsistent legal info across different state agencies, which can literally cause bank rejections and licensing nightmares. And finally, assuming temporary sales don't count. Actually, if you're a pop-up shop or transient vendor in Maryland, you absolutely still need a permit.
To expand on that exemption point for a second, there is a golden rule of tax compliance here. If a buyer claims they are tax exempt, say they're a nonprofit or they're buying goods for resale, you must collect and verify their certificate. But more importantly, you have to retain that documentation for at least 4 years. If you get audited by the comptroller and you can't produce those certificates, yep, you guessed it, you will be held personally responsible for paying that uncollected 6% tax.
Which brings us to Section 5, after receiving your permit. So, you've successfully navigated the portal, your application is approved, and you've got your shiny new permit in hand. Now what? How does this actually change your day-to-day business flow? Well, first and foremost, if you have a physical location, Maryland law requires you to display your license prominently. Let people see it. Next, your receipt systems or point-of-sale software must separately state and charge the tax. The customer has to clearly see the tax amount printed there. You'll also be assigned a filing frequency. Most new businesses start out filing quarterly. And when it comes time to actually file and remit the taxes you've collected, you'll do that electronically right back through that same Maryland Tax Connect portal we used earlier. Now, I need you to pay super close attention to this next rule, because this is where so many beginners get tripped up. It's called the zero return rule. Let's say you open your business, get your permit, but it takes a few months to make your very first sale. When your quarterly filing deadline arrives, you might be thinking, well, I didn't collect any tax, so I obviously don't need to file. Scratch that. That is incorrect. You absolutely must log in and file a zero return. Failing to file, even when literally nothing is owed, triggers automated notices, administrative penalties, and pulls your account out of good standing.
Okay, final section, resources and disclaimer.
Navigating state taxes can feel like a giant puzzle, but you really aren't doing it alone. The state actually provides some pretty robust support systems for business owners. If you prefer face-to-face help, you can schedule in-person or virtual appointments right at your local comptroller's office. The Maryland Tax Connect portal is also packed full of user guides and FAQs. And hey, if you have a highly specific question about your application, you can just directly call their helpline at 1-800-MD-TAXES. Of course, before we wrap up, we do need to provide a quick professional disclaimer. The information in this explainer is meant for educational and general informational purposes, drawing directly from state guidelines and tax resources. However, every single business structure is completely unique. You should always consult with a qualified legal or financial advisor or CPA to get personalized advice that's tailored to your specific operational needs and tax liabilities. And that brings us to the end of our blueprint. So what does this all mean for you? Are you ready to safeguard your business and confidently conquer Maryland tax compliance? With the steps we've outlined today, there is absolutely no reason to let tax registration slow down your momentum. Gather your data, log into that portal, and get your business properly protected. Thank you so much for hanging out with me for this explainer, and here is to your business's massive success.